The mission of this journey is to help people that are considering a move to the real estate industry, have been doing this for a short period of time, or who simply want to know more about real estate and the behind the scenes ins and outs of the highs and sometimes lows of this industry. Welcome to Real Estate Simplified.
Yeah.
Hey everybody, Brandon Cayley again here for episode 2. We survived the first one. I have a good friend here with me, Tony Ferrari. He is with Mid-America Mortgage. We're going to be talking about today a topic of big box loans, big box companies, mortgage companies versus your local guys, and why it's so important to fight for those local people, your preferred lenders that you know, that you trust, that you can call at 10 p.m., that you're kind of shooting it with on the golf course or you're grabbing lunch with on a regular basis. Those are the people that I want to work with, and I strongly encourage you guys to want to work for those and with those people as well. So I kind of just have a question for the audience, and it's, what if your client insists on using their bank, whatever the bank is, we don't have to say any names, but whatever the bank is, as their mortgage lender. I'm going to tell you a story really quick about when that did happen for me and really how I got burned. But I had my preferred lender here, Tony, and his team to save the day. So I had a new client, really hadn't built a strong rapport, actually just kind of met them out of the blue. Hey, I'd like to start looking at homes. Great, we'll look at homes. They didn't even necessarily have an interest in working with a realtor, but started to build a relationship, and after 2 or 3 showings, they're like, yep, you're our guy. Like, great, let's talk about pre-qualification, because you just told me that you're ready to put an offer in on this house. I need some pre-qual, right? I need some clout. Hey, we bank with X bank over here. We're what they would consider a preferred customer, so we're going to go with them. Said, okay, I don't want to lose this business, right? This is my first year. Tony, I've mentioned this to you. This is kind of more of realtors starting out, people that are thinking about getting into real estate. Yep. So if this is your first client, is this necessarily a make or break type of situation, right? Like, because you got to make some money.
That's a very good point. When it gets into that situation, you always have to consider the client's needs. And so they have a banking relationship. So if that banking relationship comes to where they're using Bank of America, Chase, Wells Fargo, somebody like that, and they want to get pre-approved with that company. They do a good job at pre-approving. Right. But that's where it stops. Yeah. Because after that, the communication's at a very, very low level. And so from start to finish, they don't do a good job. Right. Why they don't do a good job is they don't communicate. They're not there on the weekends when you need letters. So when your client decides that they want to use their bank, you obviously can try to steer it a different direction, knowing that you'll get better service elsewhere. But what you do get with the big banks is they do provide a good job up to pre-approval. The problem is that's where the process gets started. Mm-hmm. And so when that process gets started, there's a lot to go, right? And so they do a very good job there, but what they miss on is communications, weekend coverage, as well as speed, efficiency, and communication. Right. And I feel like local lenders, most of us out there provide that. Yeah. I have a big team that supports me. We have weekend coverage. You know, I think you called me at 10 o'clock at night and we saved a deal for you one time, Brandon. But
probably more than once. I can be honest about that.
Yeah, so those are some things that the local guys, because you are in the local environment. So with the big box banks, you also see a separation of quality of loan officer. And I hate to ever talk bad about anybody in the industry, but most of the loan officers that are sitting in those small box shops or the big box banks, they're newer in the business. They don't have a lot of lending experience. Most of the guys that have been around in my industry, I find to be are smaller boutique lenders that are speedy, efficiency, and allow you to do different things that make your business and breaks your business, especially for partners like yourself, Brandon. And so I think that's huge, huge.
And so being able to answer that question of a make it or break it, early in my career with that specific situation, I was like, man, this is kind of I want to please my client, even though it might not really be in their best interest to go with this big box lender. So went with them, right? Because I don't want to lose the business. I got to make some money. So we get to it, and just like you pointed out, communication, radio silence. with the loan officer at this bank and the communication with me, the advocate for their customer. We have the exact same customer, yet I reached out to them almost every single day via text, phone, email, and ghosted.
All right.
Essentially.
Do you know why that is? Can I jump in there?
Sure.
So most of those types of institutions, the loan officer here, the outsourcing of the actual paperwork is going to Connecticut, and then it might go to a processor over in Connecticut, over to an underwriter in Florida, wherever that case may be. And so there's a pretty big disconnect, and then they don't know what's happening in Texas, and how fast and furious things are in our market. So there is a problem with that as well.
Yeah. So we got, I'll speed it up. We got to a week before closing, and I finally reached out to this guy again. I'm like, who do I need to talk to? Right? Is it your supervisor? Is it an assistant that you have? Is it you? Right? Because I'm getting nothing.
Yeah, it's a dark hole.
We're in underwriting. It's still in review. I'm like, but I have nothing to tell the listing agent, right? So my trust is getting broken on multiple sides of this transaction. With my clients, they're frustrated because they're a preferred customer of this bank.
Which is the listing agent.
It is, and so we get to day of closing, the original closing date, and they tell us we're not going to be able to close on time. It's like, okay, well, I need some reasons why. I am able to get with the listing agent, and they say, well, we'll push it out 4 days. Awesome. Everybody signs. We execute the amendment. It's going to close 4 days later. Day of the second closing date is when they tell us we're not going to be able to get this across the finish line. So I give you a call, and I say, hey, I'm about to lose a deal. What can we do? Right? We look at certain scenarios. I can get this done. We can do it at that same loan amount. All good. I let the listing agent know we're going to push it out 30 days. And what was the almost pretty much clear to close?
Well, I think
from that day.
If I don't recall, I think I got that phone call at 4 o'clock. By 5 o'clock, I had a different direction than they were using from experience, that there was 2 borrowers. One of them really wasn't needed, and that was the one that was causing the grief, where they couldn't close. So finding a simpler solution to get to the same goal is what we found. And then all of a sudden it's like, well, we need to close in a week. And I said, okay, let's go. So what we did is ordered a rush appraisal. We put all their documents right into underwriting and had that back in 24 to 48 hours. Okay, we're good here, and then we need to do this, this, and this to put back, the conditions for that approval, and we were done in 9 days. And so another thing that we did to help support you is that listing agent was obviously pissed off, right? She's like, we're supposed to close here, we're supposed to close there.
Not a great experience.
And they were frustrated because she just wants to sell the house and take care of her customer. So the second call I made that day was to that listing agent. She's heard of our company, Mid-America. She knew a little bit about us, not a ton, but when I had that call, I had some rapport, and she trusted what I was saying. I also put almost 100% guarantee that I'm not going to make a mistake. Just give me a little bit of time to get this done, and we were done in clear to close in 8, 9 days. I don't remember if it was 8 or 9, but very, very fast.
Well, and one thing that I'm able to do and have confidence in saying it as well when a listing agent, even before they are accepting offers, saying, hey, how well do you know this company? How well do you know this loan officer? And like I said in the introduction, I play golf with the guy, right? We do happy hour, we do lunch, we text.
We have a relationship.
We have a relationship, and that's what this business is. And I think a lot of times when you're dealing with more of the big box, you lose that because it's very transactional, it's very hierarchical. Hey, my boss said I can't do that, rather than let's find a way.
Yeah, and another thing, the big box guys, they're looking for things inside of a box, right? So they have overlays, which an overlay is basically not a Fannie or Freddie direct type of interpretation. So those overlays are like, oh, we want this, we want extra reserves, we want things a certain way. And if you can't meet those overlays, they won't do it. With my company, we're a Fannie and Freddie direct lender. So what that means is we don't have overlays. Fannie and Freddie spit out what it takes to complete this mortgage for this borrower with that job, with this money. You meet those, you go close. And so with all that, it also simplifies the process. It doesn't convolute it. It allows us to be more efficient, faster, and get rid of all the things that don't matter.
Right.
We do a lot of appraisal waivers, or some of the banks won't accept an appraisal waiver, even though Fannie and Freddie will.
Right. In one of our last transactions that we're working together with, I'd call and say, hey, when's the appraisal set for? And it's like, oh, we got an appraisal waiver.
Correct.
This is fantastic.
It is, yeah. I mean, because honestly, the biggest stress most mortgage guys that run a good business are going to have is the fact that we can't control an appraisal. That's one thing we can't control. And so when you lose control, when you want it and you crave it because you want to be able to run your systems, that's one thing. If you can avoid at all costs, let's do it. By all means.
For sure. So I hope the people that are listening to this, people that are watching this on YouTube or listening on Spotify or wherever you listen to podcasts, I hope you really understand the reason that we're having this conversation right now is that there is a difference, whether it's big, whether it's minimal. There is a clear difference between a preferred local lender and a big box that you might just be a number, right? If they don't close it, they still make the same money type of situation. So we had a set of questions. I know you're itching to get to those. So the first one being, and we've kind of talked about this already, like how you partner with me, how you make me look good, how I might be it looks like I'm the rock star, I'm the lead singer on the stage, but really if I didn't have somebody like you, I should probably be the guy that's carrying the guitar on the stage, right? Like I should be the roadie, I should be the groupies, like what am I doing here? So how do you partner with realtors to make them look like the best choice to work with, and also best offer to accept by the seller?
So one of the things we do for our agent partners, I think the biggest thing with my group is that we're there. Okay, we're there when you need us. You call me at 8 o'clock at night and you need something. If I'm coaching my kid in sports, I got Holly, Tabitha, Janet, as well as Ronnie to pick up the slack, because you guys are working late hours, weekends, and so we're there in support. And then the next big thing I think that makes you look good is our communication, because we're not a black hole. Every week we send out a Tuesday update. You've seen those that just kind of let you know where we're going through the process in a 30-day close. If it's 2 weeks, it goes a little bit faster, obviously, because we start rushing things. But that communication aspect really helps you, because you don't have to worry about following up with the lender. Like you said with the bank deal you worked on, you're constantly harassing. My phone doesn't ring from agents very often saying, where are we? Where's this? The only thing they're asking, where's the appraisal? Where's the appraisal? And we can't control that. So that's a big thing. Plus being a local, I think my company, Mid-America, is the best small, big mortgage company in DFW. So a lot of people know us. We have a good reputation, and so my pre-approval letters, having a big footprint, 20 years in this business, the listing agents know who we are, and it also allows you to move up a little bit in this competitive market to get your offer accepted. I think that's a big thing when 20 offers are going in. Knowing this guy's here in Dallas, Prosper, those areas makes a significant difference. But the communication, I think, is the number one. For sure, absolutely. One thing that separates us. Well, and that's something that I've seen that some of the other lenders that I have worked with, and to be perfectly honest, and you and I have talked about this, right? Like, I want to have at least two. Right now, I have two preferred lenders that I'm sending my business to, just because maybe I think that for whatever reason, that other lender, they're going to be great with this customer, right? Or I think, hey, Tony's going to be a little more in this headspace, so I'm going to send them that way, right? But it's, especially with what I've seen with you, is you take the extra step, right? A big bank that I've worked with, and it's been numerous, that I just had the one story of the one, but it's been numerous where I might want to reach out to them and call them and say, hey, your client, my client, our client, they're about to submit an offer. I'm going to include you on the email. I'd like for you to introduce yourself, reach out, and I don't even have to say that to you, right? Like you're going to send an email, you're going to call them. Yeah, that's two other things that I didn't mention before about what we do for our agents is we kind of have a theme day system with my team. So Tuesday, that's when you see our updates, just on everything we're working on. But Wednesday is a day where we work TBDs, and TBDs, I think, Brandon, we've got a couple clients that haven't found a home. They've been shopping for weeks. So we're checking in once a week just to see how things are going, making sure you're getting listing appointments set up for them. Everything's going well with everybody.
Right.
So we're popping in there to check on your business because we've got a big team where it's just you. And so we're here to support you in that way, just to make sure nothing's derailing.
Yeah.
Because if it takes 6 months for this person to find a house, there's a lot of risk.
Oh yeah, especially in this market.
And so helping with that is a big thing, and capturing and retaining those closing numbers that you look for.
Yeah.
And so we don't want to lose your business, and so we're going to help you keep it.
Right. Well, and I don't want to lose their business either, right? I mean, we're in the business of finding people homes.
And that's absolutely the point of it.
Yeah, absolutely. I know we've touched on this a little bit, but if there's anything else as far as just a real, true, raw difference in big box and local lender, what's kind of maybe the one or two things that you want the followers to take away?
I would say the service you get from somebody like myself and the communication. Those are the big two. Yeah. And I really think if you're going to add a third, it's really knowledge. Yeah. Because the loan officers there don't have the knowledge, experience-wise, that somebody that's been in the business 20 years working for these more efficient companies, because the banks aren't as efficient. They've got the overlays, they've got things going all over the place, too many hands in the pot.
For sure. Way too many hands in the pot.
So that's, I think, the big three for me.
Well, and we talked about, I think a common theme, if there's anything that the people listening to or watching to this take away, it's the communication piece. But we talked about this before we started shooting, is another example of a client where they woke up one day and they were ready to walk away, right? And it's like, man, Tony, like, I got this fiduciary responsibility, but you know their numbers, you know their finance. Would you be willing to have a conversation? And hey, let me give them a call, right? And just kind of high level.
Yeah, you called me and said that client was 99% not wanting to buy the house because they couldn't afford it.
Right.
And so staring and analyzing a mortgage application is very easy after you've done it for a very long time.
Sure.
And I was shocked to hear that.
Right.
And so I said, let me get in and see what it's going to take to save this deal. So what I did is build a customized financial plan, went through the client's gross budget, showed them how much money they make, because they're both on salary, so very easy.
Stable.
And here's our bills, and here's how much money is left. And when we got through all that, I was like, the key is you want to be able to, after house, car, gas, grocery, cell phone, everything you have, is to be able to afford everything, one, but two, also be able to save 20%. And I showed them that they were able to save 29% and still make money, save money, and it blew them away. They're like, well, yes, we should buy this house. Yeah. And so I think buying a house for any new first-time home buyer or even existing home buyer, the tax benefits that come from it, just putting your money somewhere working for you, plus what we're seeing in DFW with the appreciation rates. I think since January, it's anywhere between 12 and 15%. And so on $100,000, that's $15,000.
And that's real value on a home, right? That's not just based on how much people are willing to pay for it. I mean, that's what they're appraising for.
That is correct. And so, I mean,
I think that's what a lot of consumers don't think about too. Exactly. It's like, oh, I'm paying $20,000 over the list price. Yeah, but it's appraising $20,000 over the list price because the market is dictating that.
Correct.
Right?
I don't know if that's going to go on forever.
No.
But over the last 5 years, COVID did some things, but previous 5 years, if you look at Frisco or Plano or any of these local areas, 3 to 5% has been the norm.
Sure.
And so a 3 to 5% investment in real estate is a good return, because also if you're renting, you're getting a zero return and no appreciation. So it's a double whammy. Yeah. And so that to me is number one in a financial plan of building a family net worth, saving 20% and certain things that go along, and then you start playing with money different ways once you have those budgets set up.
So they realize they can still afford a home and go out to eat once a week.
Correct. Yeah.
Type of situation. They're not living off of rice and beans. No pun intended on any philosophies over here.
You also, the other piece in there, you want to make sure you have 3 to 6 months of living expenses off a personal budget.
Like a reserve.
And I can't tell you, so many people don't analyze that. And so me coming in there and showing them that, and showing them how they can afford the house, how they can still save, that's something that I don't think many lenders do out there. I really don't, because they don't care. They're like, oh, you're approved, you can go spend this much. Yeah. That's what most people do. But going that next step, that it locks in the business and trust factors.
Builds trust, yeah, 100%.
And allows us to do a better
Well, and
job.
if I let a big box know that, be like, okay,
Right.
well, we're here when they're ready.
They don't do that.
Right? We're here when they're finally comfortable. What?
They do not do that.
Okay. And that same couple, they've got twins. They've got 2 kids, right? So like they were on the verge of being willing to continue renting and having no equity, having no financial appreciation for themselves. And I mean, they've got two mouths to feed type of situation. So I mean, it's when we're thinking about real estate, it's not just transactional. I mean, it's very relational.
Yep.
And it's livelihoods that we're talking about.
Yep. And most of your newer agents are going to work with those first-time buyers more, and they need a lot more TLC throughout the process. And so you can see that when we're going over an application. For the sake of mortgage application, I know everything.
Right.
Besides their blood type and how tall they are and certain things, I know everything. And so I
thought that was on your intake sheet.
No, it's not. Oh, okay. I try to get that, but it's just a joke.
Voluntary.
But when you get all that information and you analyze it, you can see what they should do, what they're doing, and really build out a financial plan where you can show them the way on what they should do, because each one's different. What I do, if I looked at Brandon's application or anybody else's out there, I would put myself in their shoes, knowing how much money they make, how much they have in the bank, and say, okay, here's kind of what you should spend. You can go spend this much.
Right.
Here's what you should spend. You spend down here, you're going to be great.
Right.
So that's another difference.
Yeah.
Yeah. Not trying to throw out the biggest number in the world.
No, love
Let's
it.
go find that sweet spot.
Yeah, love it. So what does the process look like from pre-qualification to closing? And I guess I'll take that a little step further. What does that look like for Tony and team?
Okay. Well, pre-qualifications where you're initially running credit, looking at income and assets. I have an assistant, Holly McNeely, who takes all my incoming business, sets up.
Shout out Holly.
Yeah, shout out Holly. And Holly's a loan officer. She's been in the business for 10 years, so she really goes through and just handles that new incoming business with us and does a pre-qualification. And then it turns over to a pre-approval. So there's 2 differences there.
Right.
Pre-qualification is, okay, everything seems right. Pre-approval is prove it to me.
Right.
So then I have another assistant, Janet Pitney, who's doing this for us now, that takes in all the paperwork, sends out the needs list, goes back into that application and trues up the numbers to where their income's perfect, the bank account information's perfect, and then I come in and review that. And at that point, we'll probably send out a pre-approval letter.
Yeah.
To you to go start shopping for a home with slam dunk pre-qualifications. Holly and I send that sooner. Like if they're a salary job, there's little margin for mistake.
Yeah.
And then we do that a little later and just make sure. But because we want to get those letters out as far as a pre-approval to you guys to get out shopping, because it's very competitive.
Yeah.
We don't want to waste days, right?
Right. But I think a lot of times even the listing agent is simply looking for the pre-qual.
So with the pre-approval or pre-qualification process, I have a metric out for Holly. When Brandon sends over Joe Blow client, we try to call that client within 30 minutes.
Yeah.
And so that's our goal. Now, sometimes we're a little occupied where it's maybe takes an hour, but that is our goal, to contact within the first hour to 30 minutes. And then we also follow up with an email, trying to get in touch so we can start to gather that information. And right now we're using technology to do that because we have a very integrated click and close system that we can text or email somebody. That's really, really cool to allow them to get started there. But then we turn it to a pre-approval. At that pre-approval part, we go into, okay, we're waiting for them to find a house. So we're obviously there for our agent partners, but we're also checking in every single Wednesday just to make sure documents are there, they haven't lost their job, they didn't buy a boat. They're still motivated because this market is tough and people are getting unmotivated and getting beat up. And so we're just trying to stay in front of them. So once a week we're popping in at a minimum. If it happens quicker, then we're going right into a contract. And so when we go into a contract, that's where Tabitha Houston, who is my contract to close. She acts more as a processor, but she works from the contract all the way to the close.
Shout out Tabitha.
Shout out Tabitha. So Tabitha has been with me for 6 years, and she is top notch in this business, just like Holly and Janet as well.
Forgot to shout out to Janet. Shout out Janet. There we go.
Janet got the shout out. So when Tabitha takes over, her number one job is this: to make sure the clients are happy. because that's where it's stressful. We need another pay stub. We got to docu-sign this. We got to get an inspection reviewed. We got to order the appraisal. And so she brings all of that together with the paperwork we got for the pre-approval, then presents that to the underwriting. So then we get a conditional approval. Conditional approval might be, hey, you need a new pay stub or a better driver's license, whatever those items are. We clear those, and then we go get it ready to close.
And guys, that's also on the Tuesday update.
Yep, it is.
Right? I mean, that's literally broke down. This is still what we're looking for, or hey, it's with underwriting.
You got it.
We've got the pre part with the underwriting, or it's under review. It's here's exactly where we are.
Yep, exactly.
And if I have a listing agent that's asking, here you go. Like, I can almost copy and paste that.
Well, guess what? We don't just send it to the buyer's agent. We send it to the listing agent.
See, there you go.
We send it to the title company. And if it's a builder we're working with, we send it to the builder. So everybody is involved, all parties. The only person that doesn't get it is an insurance agent. We just get that and set it up for closing.
Right.
But that way, pretty much all parties in this transaction are in the know.
Right.
The title, both agents, us, everybody.
Yeah.
So that's a really key step. So from there, I shoot after clear to close, we're setting up closing.
Right.
That's the fun part. When we show up, party time.
It is.
Party time.
It is party time. It's champagne popping for sure.
Yes, sir.
Definitely. Just listening to that process and living that process, it's so comforting for me knowing that I've only been doing this for right around a year. But that should also be something that, whether you're new to this industry, whether you're thinking about getting in this industry, whether you've been doing it for a little bit, if your lender is not doing those things, you might need to ask the question why, and you also might need to start interviewing. Start figuring it out, because
feel free to call us. We'll
there you go. Yeah, Tony with Mid-America Mortgage. We'll do all the shout outs we need, but it's such a peace of mind. Tuesday at 8:30 or Tuesday at 9, whenever it comes in, it's there, right? And if I see anything, I can call Tabitha, or I can call Holly, or whoever, and be like, hey, what's up? Or text them, right? There's plenty of times that I text, and within minutes, I've got an answer, or I at least have a, hey, I'm looking into it.
Yeah, our topic is, can you text the guy from the big bank? Nope, it's probably an email.
100%.
It's the email.
Yes.
But, we try to be available as a group.
Yeah, 100%. Yep. So I hope that was helpful from a lending perspective, from a preferred small hometown lender side of things versus a big box. Tony, I'm going to ask you every question that I ask every single guest, and the first question being, what is the biggest shortcoming you've had in this industry, kind of real estate as a whole, or you can tailor it to mortgage, and what did you learn from it?
That's an excellent question. So the first 10 years of my career, being in the mortgage business, I didn't realize the value of what a team was. So I was always a one-man wrecking crew.
Yep.
So I did the business all by myself. And so that was the biggest shortcoming, because I held myself back so far because it was like this.
Right.
And I couldn't do the better communication and things like that, because you could do 6 transactions, 1, and it was a constant flow. And I didn't realize until I met the owner of my company, Michael Cooksey, who's kind of a mortgage coach for me, kind of changed my life. He's like, look, Tony, the reason that's happened is you need somebody that can come in and help tie up this, and then you can tie up this, and then you can build.
You can focus on the right things.
You can build a mortgage process that's sustainable to build up to. And so that's when I hired Tabitha about 6 years ago, 6.5. And since then, I've been on a steady slope of growth with business. Then I hired Janet, then Holly, and now Ronnie on the front end side, so we can keep these experiences going for more and more people. And so I didn't realize the mortgage business, running it as a business, and doing all these things until, I would say, I think 2013, 2014 is that time frame, and that changed my life. It really did.
And that's going to be one of the topics.
It's been a lot more fun, too.
For sure. Well, sleeping a little bit easier at night.
Yeah, it's a little less stress, but also more transactions does create more stress.
Yeah, well, you're just treating it as a business, you're treating it as a career, not a job. Yeah, and that's huge. I think that's one thing that you know, our producer over here, Brandon Bates, in our network group, we talk about that, right? Like this is just a job. If you're just chasing transactions, you're gonna, it's gonna be very cyclical, right?
Get stuck
you're
in
gonna
one,
have 5, and then you're gonna have 0.
And you're gonna get stuck in that hard one that's gonna cost you 4 others.
Yeah, because you have to spend all your time on that one. So that's going to be one of the other topics that we have a little bit later down, is how do you run this like a business, right? How do you treat this as a business and not just, oh yeah, I'm a real estate agent. So that's awesome. What is one piece of advice you would give a realtor that is just starting out?
Ooh, that's a tough one. There's a lot I can give there. First, I would say structure. Find a structure.
Okay, yep.
But as far as gaining business, if you're a brand new agent, how are you going to structure that? So I'd say there's theme days that you need to call, build some power hour call times, but really you want to focus as a new agent is nobody knows that you're an agent. So you need to tap into your sphere of influence.
Sure, absolutely.
And really market to those people. And I don't call those people like family. I think of it more as VIPs.
Yeah.
People that are very important to you, but also can be very important to your business. Business owners, CPAs, financial planners.
Absolutely.
Because people that are talking about money, like ourselves, have good avenues to get business from and create partnerships. And then really, I think the biggest thing most agents within less than 2 years really fail at is the way they're managing their closed business in their database.
Like follow-up?
Follow-up, because they're transactional.
Right.
And so, hey, we got closed, it's paid, boom, and done. They just forget about it.
Yep.
And if you look at my 10, 20 years in this business, I really figured that out, I think about 12 years into it, that database, my past clients was everything.
Absolutely.
Last year, 35% of my business came from my past clients.
Yeah.
And that's a big piece.
Yeah.
That's a big piece. So starting that and maximizing on that right away, I think is the best piece of advice I can give anybody that's just getting started to track those things.
Yeah.
VIPs, sphere of influence type people,
right?
And then the people that you've already helped.
And you talked about sphere of influence. This leads me into the next question. I hope I'm not stealing your thunder, because a book that I've read and that really does talk about the sphere of influence is The Power of Who.
Okay.
So it's a really great book
I've heard about
sphere
it.
of influence. You know, it's kind of your 100 people, right? How are you connecting with those? Because they know somebody, right? And they know somebody. So I don't think by your reaction, I don't think I'm stealing your thunder on the next question. Yeah. So which book, article, podcast have you recently invested in that gave you some great insight?
So I don't like to read. So I'm the guy that loads it on the phone.
Yeah.
Puts his earbuds on. And so my whole group is reading this now because we're trying to execute new things we're doing with our business. And we execute, but we don't measure and monitor the things that we change up in my team's business.
Sure.
So we're all reading the 4 levels of execution as we speak. I've finished it, and it really shows you a way to execute at a high level, but also maintain that execution throughout the process. And so I'm pretty excited for the rest of my team to finish that. So when we bring in new things,
4 levels of execution.
Is the book. I forget who the author is, but definitely check it out if you're running a group, because it's very, very good.
Love it. Good stuff.
Yeah,
okay, this is more of a fun. It doesn't really maybe have a lot of brain power, or we got to think about it too much, because you might be doing this already. But if you weren't in real estate or mortgage lending, what would you be doing instead? Your career.
That's easy. So I'm an avid golfer.
Okay.
I've played golf a couple times. I really would love to be in the golf arena. Probably on the instructing side. Okay. Or even just managing, a country club or something like that, just because I love the game. So just it's in its purest form, and so I love golf.
100%.
And so getting in that industry, and then my second love, so golf's my summer sport. Fall sport is hunting. Yeah. And I really would love to go out and guide hunts and watch, like when I had my let's see, he's 9 years old, kill his first deer. Nice. That was my favorite day ever. Yeah. Watching him shoot his first animal. Yeah. And so guiding hunts or something like that would probably be number 2. Yeah. And I like to split it up. So 1 year or half a year doing this and half there. Okay. So I'd like to take on 2 roles.
Yeah. Hey, a winter job and a summer job. I love it.
Busy.
And the last one, this is more of just hey, how do people get in touch with you? How do people get in touch with Mid-America Mortgage? Like, where's the best place for them to go to find more about what you do?
Okay. Well, I think the best place, just put it out in digital, is theferrariteam.com. is the easiest place to go because it's got my contact information. We outsource that for clients to be pre-approved through. For anybody that wants to reach out to us, we'd love to talk to you, help you with your business.
Awesome. Well, Tony, thanks for your time.
Hey, man.
This was awesome. I always enjoyed hanging out. I enjoyed losing to you on the golf course. But I also enjoy the lessons. So that, just like you said, you want to give me some tips and advice.
You're my first student.
Yeah, it has already been paying off. So I hope this was a great informational session for everybody who's listening or watching. And yeah, we'll see you again for the next episode.
Yeah.